as I'm reading this information and as I talk to my buddy about like what's happening, I realized that this is like, he explained it as like a soap opera. Now, what I'm finding myself doing too is I'm checking the news because I couldn't believe how quickly the sentiment had changed from this morning that, oh, President Biden and Putin are going to be able to come to a peaceful resolve. Like, and then by the end of the day, it was like, nah, that's off the table. Hey y'all, I hope you are doing well. Oh, let me stop the wiggling. All right, I hope this thing is on right. Like y'all, trying to get all of this stuff, like I'm trying to improve the quality of the videos that I produce for you guys. I don't know if you can tell any difference, but there's a lot of time and a lot of effort making sure that the sound is high quality, that the image looks high quality, and I'm trying to add more graphics into the videos as well. So I need y'all to be patient with me as I work through these growth periods. So anyway, I'm glad that you tuned in for the video today. The last video that I put up, which was Saturday, I talked a little bit about, well, I started the video out talking about fundamentals, and I gave my perspective as I understood it, how certain things that were happening in the world and how it was influencing the pair that I was talking about. I think what I'm gonna do is, in all of my analysis videos, I am going to do my very best to include a fundamental analysis, even if it's just like a mini analysis, because fundamentals do play a role in the value of a currency. Ever since I started this channel, I say 99% of the videos that I've uploaded has mainly been technicals. I think I did one video with fundamentals. You have probably gathered by now that I am a technical trader, and what that means is you can pull up a chart on TradingView, on Smart Trader, and I can take them tools in that charting platform and I can come up with an idea of what I think is going on in the market, and from that I can derive how I'm going to move forward, if I'm going to move forward at all. And I think that's a foundational piece for most new traders that they need to establish. But now I want to step my trading game up, and in order for me to be able to do that, I think that adding the fundamental piece to the technical piece will allow me to do that. It will give me insight on certain moves that I think are going to happen as I embark on this journey. I'm going to take you guys with me. Today there was some news, and I made some posts over the weekend, and I kind of just want to explain my take on what I think is happening. Yeah, that's what I'm here to do today. I don't think one is better than the other, technical or fundamental trader. I think that the two can work in tandem and in concert in order to produce some really accurate results than what you would get with one by itself. I think that price will always follow technicals, but we may see certain moves happen and be able to explain them by what's happening in the country's economies. Okay, so one is not better than the other. So a lot of you guys have asked where I get my news from. There are a couple different places that I am learning that I like to look at in order to determine what's going on. One of the websites I like to use is Forex Factory. Forex Factory, I'm learning, is a great place to find out organized information as far as the time, the date, and what is happening. When I first started trading, I was told, go to Forex Factory, look and find the red folders, and don't trade during that time. I've experienced a little bit of growth, thanks to Benny and Ryan, that we have come a long way from don't trade the red folders and actually understanding what those events mean and how they impact the market. Now, I'm also learning that I like a little bit more information than Forex Factory provides. I use sites like tradingeconomics.com. I also use Bloomberg. Now, over the past weekend, I shared some information about a couple of things that were happening that I thought would influence the currency pair that I did a video for, which is GBP JPY. Now, this news not only affects GBP JPY, it can affect USD pairs, it can affect Great British Pound, it can affect the Japanese yen. There's a couple of things. What I shared this weekend was the information about the Queen of England testing positive for COVID-19. Now, to some people that might not be a big deal, but we know what COVID-19 is. We know that for some people it can be deadly, or it can be severely debilitating. For a lot of people, it can be just like a cold, right? But she's old. And so that's important. And that creates uncertainty around how that's gonna pan out. This impending war between Russia and Ukraine. Like I posted this morning, there were reports that President Biden and Putin had a conversation, that they were gonna end up talking things out in a more diplomatic approach. And by the end of the day, the news was, oh, there was nothing set in stone regarding that meeting, so hopes are fading that a reasonable approach can be used for resolution. We still don't know, like, is Russia going to invade the Ukraine or not? How that affects GBP JPY specifically is that we probably will stay just in a holding pattern until something happens, whether that be war, whether that be a peaceful resolve. Probably going to see, when I say stay in a holding pattern, that's probably going to be like consolidation that we'll see. Another piece of news that I found very valuable today was that a governor of the Federal Board of Governors, Governor Michelle Bowman, was at an event today in California for an association of bankers or something like that. And she gave some insight on how she feels regarding inflation and the interest rate hikes. She is in support of a drastic rate increase in order to curb inflation. So you probably like inflation. Y'all, I went to Little Caesars to buy a pizza this past weekend, yes, on my cheat day, and that thing was $5.55. Like, it's no longer $5. They've increased the price 55 cents. Additionally, I've been seeing a whole lot of posts on social media talking about folks mad about Dollar Tree increasing their price by 25 cents. So you no longer have dollar items, it's $1.25. And then lastly, everybody knows that there has been disruption in the supply chain. We've been dealing with it for a while. It's affected construction, it's affected real estate development, even right here in the city. It's affected what's available. The joke has been the grocery store look like it needs to go to the grocery store. Like, everything is kind of just a mess right now. Like, the demand is really high for a lot of products. The supply is low. So it's very interesting how things are playing out right now. Governor Bowman is saying that in order to stop prices from increasing, that some policy measures have to be put in place so that you can kind of control that inflation. Like, inflation is the highest that it's been in 4 decades. It's at 7.5% right now. So what she's saying is that we no longer need the policies that we needed at the beginning of this pandemic. At the beginning of the pandemic, these policies were put into place to encourage people to spend money and stimulate the economy. We're 2 years from that. So now, as a result of those really low rates from the federal government, low mortgage rates, low consumer loan rates, low everything, and coupled with the demand for those things, we're seeing prices like skyrocket. And so in order to fix that, the government has to raise rates. And so right now, the interest rate for the Fed is at 25 basis points. That's 0.25%. And so what she's saying is that she's in support of raising the interest rate 50 basis points, which would put us at 75 basis points. And so what that means for consumers is that things are going to start costing more. The cost of credit is going to be more expensive. So when you go to get a mortgage, you're not going to have those sweet low rates that we had for the past 1.5 years. So this is important if you plan to do a couple things. So there's a meeting that's held every single month with the central banks. It's held, I believe, in the middle of the month. I think the date is like March 13th, March 15th. And there is where they announce what they've decided to do as far as rates are concerned. Governor Bowman is saying that she is in support of a significant rate increase, and we can see it as early as March. As I'm reading this information and as I talk to my buddy about like what's happening, I realized that this is like, he explained it as like a soap opera. And it really is, because it's like all of this stuff is so interesting, and it's a lot that's going on. It's a lot that moves, like it's a lot of moving pieces. But when you have a system in order to digest this information, you realize like this is some interesting stuff. What I've committed myself to doing is going to Trading Economics every day, looking at the highlights of the news, and then going and seeing what upcoming events are happening. Now, what I'm finding myself doing too is I'm checking the news because I couldn't believe how quickly the sentiment had changed from this morning that, oh, President Biden and Putin are going to be able to come to a peaceful resolve, like, and then by the end of the day it was like, nah, that's off the table. You know, hopes are fading of that peaceful resolve. War might be back on. And so now I can understand just a little bit better about how it relates to the currencies. And as I explained on the last video, if you haven't watched it, with all of this political unrest, with the potential of interest rates increasing, investors are more inclined to take their money out of certain countries and move it into different countries. So when we talk about like safe haven currencies, and we're talking about the Japanese yen, we're talking about the Swiss franc, and we're even talking about gold. And so you'll see that those currencies, you'll see that where money is being put into those countries with those currencies, that those currencies can gain strength, which is why I was bearish on GBP JPY. So if war happens between Russia and Ukraine, we're probably gonna see GBP JPY sell off. It's interesting, y'all. It is interesting. There is a lot that goes on in making these prices move, and those big moves. I think somebody commented on my last video. I mentioned like the market moves in waves, and they were like, no, I saw this big huge drop. Like when you see them big huge drops, it's usually something news that pushed that drop to happen like that. I think it was like 2 years ago, I did a trade, and within 2 hours, price had traveled 300 pips. Granted, it was a GB, I think it was GBP JPY. Them GBP pairs be moving. I'm gonna do another video on that. Those things, like if you're looking for volatility, those pairs move more as compared to the other pairs. So anyway, I done talked y'all head off for now. I hope that this information was valuable to you. If it was, please give the video a thumbs up, and then consider subscribing to the channel. And if you are looking for consistent on fundamental analysis, my partners Benny and Ryan, they are beasts, okay? And so together we have a mentorship where we get together 7 times a week and we talk about this stuff. And not only do we talk about this stuff, we break down the charts and how they work together. So anyway, I'ma shut up. I will see y'all on the next video, and I appreciate you guys for watching.